quick comparison, even on the revenue front, between Santos and Woodside. You've got revenues down for Santos, up for Woodside. Can you extract and pass judgment on that metric alone, first off?
Sure. If we have a look at Woodside Petroleum and Santos at very different points, and I guess a big jump in production for Woodside Petroleum this quarter has come from the fact that we've seen Pluto come online, and that's really why we've seen the jump in the second quarter production results. In the first quarter, we saw a production result of 14.1 million barrels of oil equivalent. Now, that was affected by cyclones. In the first quarter of 2011, that was at about 16.3 million barrels of oil equivalent. And of course, for the second quarter results, we've seen a jump up to 20.1 million barrels of oil equivalent. The jump that we've seen in production has led to the increase that we've seen in revenue as well for the quarter, but that jump, of course, comes from that Pluto project coming online and now producing. Great news from Woodside Petroleum, and better news that they've even upgraded their full year guidance. Previously, they were forecasting 73 to 81 million barrels of oil equivalent, and we've seen an upgrade a few minutes ago to 77 to 83 million barrels of oil equivalent. So this should be good news for Woodside Petroleum share price. And the share price is at a very important point in time. If we have a look at Woodside Petroleum and have a look at the 2-year chart for Woodside, this is what it looks like. And if we have a look at the chart, you can see where we are at the moment is a very important point because we're testing the 2-year lows. And if I just draw a line where that support level is, it's around that $30 mark. So you can see we're at that point now. So it's great that we've got some good news to get us out of that danger zone because, of course, if we see that $30 mark being broken, we could see some more downside there. So some fantastic numbers coming out of Woodside, full-year production guidance as well. And I guess the market's just going to be watching the commentary on some of its projects. The great thing about Woodside Petroleum at these prices is that the market's really not giving any sort of valuation to a lot of its growth options in terms of Pluto, in terms of Browse, in terms of Sunrise, as well as its exploration options as well. So at these levels, looking very cheap with its world-class portfolio of assets, coming out with a very strong second quarter result and an upgrade to full-year guidance.
Yeah, we've got CapEx estimates for Santos now rising by about $2 billion, $2.5 billion. So is that blowout territory? Did you expect that from this announcement?
I guess if we have a look, we did see $2.5 billion being brought forward, and this is one of the things that the market's very sensitive about, cost blowouts. Now, Santos's proportion of that was $750 million. But if we have a look at these production results that came through, $13 million for the second quarter, that's compared to 12.3 million barrels of oil equivalent for the first quarter. And the first quarter, we did see a better than expected result coming through from the new Reindeer oil field in WA, and we also saw a slight increase in the Cooper Basin. But if we have a look at where production comes from for Santos at the moment, it is from the Cooper Basin. And the next couple of years are going to be quite transforming for Santos. And the value of Santos, is, which at the moment is primarily derived from the Cooper Basin, is going to shift more to these LNG projects. So the Papua New Guinea LNG project and the Gladstone LNG project, which come online in 2015 and 2016. So they're still a way off. We are watching capital expenditure and any mention of cost blowouts, of course, the market's going to be very sensitive to. But in terms of these second quarter production numbers, just the production numbers, a solid result. We saw a very strong first quarter. It does look like that's continued into the second quarter. But what we have seen is probably revenue coming under a bit of pressure. And that's really because of the decrease that we've seen in oil prices. Oil prices over the last 3 months are down by about 12%. And in comparison, Santos's share price down by about 23%. So we have seen oil prices coming back from those 100 US a barrel levels, and so they're down around about 12%. Santos at the moment deriving most of its value and production from the Cooper Basin, but of course the next couple of years are going to be quite important in that shift to LNG.
Last couple of days, but you can see already for the new trading day, gains are between 0.7 and 1%. What are your thoughts on this sector and how that might contribute to the gains in the session today?
I think once again investors are really just chasing yield, and that's a key focus of the market at the moment, whether it's in the bank, whether it's in the telecom sector, the utility space, the property space. I guess investors are looking for yield. In terms of the performance of the Big Four over the next month, I do expect CBA to outperform, but that's more of a timing issue than anything else, and that's because CBA pays its dividend in August. August compared to the other three big banks which pay their dividends in November. So CBA expected to outperform because of that upcoming dividend payment. And we see a number of big companies coming out to pay dividends in August. So that's likely to support companies like Wesfarmers, like Telstra, like CBA over the next month. The key challenge is whether we're going to see that share price hold up after August.
Does that kind of fast and furious approach to business gel and sit comfortably inside a media company at this point in the cycle?
I think what investors are looking for is a bit of stability in terms of Fairfax's board. What they don't want is a bit of a kerfuffle and this instability which comes from, I guess, infighting between major shareholders and the board. And I guess today is going to be a big day for media. We've seen that announcement coming out from Fairfax, but also Seven West Media comes back online after its capital raising. So that's going to be a key stock to watch to see how much its shares are impacted by that capital raising that we just saw. So I guess the media sector very much in focus. Some media companies seen as doing good in terms of changes, and there are companies like News Corporation which have performed extremely well. Fairfax still with some key challenges in terms of its business, and it doesn't help that we're seeing instability at that board level.